Hello, everyone. Hope you're having a good week. Thought I would do another one of these stock market update videos, just to keep you up to speed with what's going on. Just by the way, the reason why I do these videos is mostly to keep my existing clients up to date. I've got over 100 clients, so it's not easy to always phone all 100 or more on the same day or even in a week. So let's get right into it. I'm going to share my screen here and go through some charts with what's been happening over the past week or so since I last did one of these videos. The big news we saw internationally was the collapse of Silicon Valley Bank, SVB Bank, and that's really caused ripples through the global stock markets. So starting off with the Johannesburg Stock Exchange, the top 40 index. This is a monthly chart going all the way back to 2008. We saw the big crash in 2008 there. And then when the Fed started stimulating and dropping interest rates, that really helped the stock market dramatically. And it's been pretty much on an upward run since 2009, which was the bottom of the 2008 crash. There was a bit of a blip again in 2018. And again, when COVID struck, there was a crash there, but it certainly has recovered a lot. Again, the Fed did the same thing that they did in 2008. They started stimulating, dropping interest rates, pumping more money into the system. That caused a dramatic rise in the US stock market and the Johannesburg Stock Exchange, well, the top 40 index anyway. And we've seen a dramatic rise in the stock market up until a sort of a peak in January this year. Now we've seen a bit of a pullback following what happened at SVB. So it's been quite a dramatic pullback from its highs, and the last week or two has been quite a pullback. So how has it affected the US stock markets? Also quite a pullback. Again, this is a 10-year chart. Again, it's a very similar story. The crash in 2008, Fed starts stimulating, lowering interest rates. Stock market rallies a lot on the back of that until we see COVID strike, stock market crashes over there, and the Fed does the same thing again, dramatically dropping interest rates and stimulating monetary stimulus, which caused a massive rally in the stock market. Unfortunately, it also caused inflation as well. So towards the end of last year, they stopped lowering interest rates and actually started increasing interest rates, which led to interest rates in the States going up dramatically. This is the US 2-year Treasury yield, and here you can see it, interest rates dropping significantly in 2020 during COVID, at the beginning of 2020. They dropped massively, interest rates, you can see it here. It stayed low for quite a while until September 2021, and interest rates started picking up again sharply, because they realized that the only way to combat inflation, which all this cheap money was causing, is to raise interest rates. So you can see it here on the 2-year Treasury yields, dramatic rise towards the end of 2021, all the way until the end of January, February this year. And now we've seen what's quite interesting is with the collapse of SVB Bank and one or two other US regional banks, the market is guessing that the Fed is going to respond to this by actually dropping interest rates. That's what the market, they haven't done it yet, but that's what the market is guessing that they're going to do to stop the contagion, which could happen if more banks collapse, which is really what no one wants that. So a little bit of fear going on at the moment, but fortunately the authorities in the States have stepped in. They guaranteed depositors their money back, so no one's going to actually lose money, and that should stem the run on the banks. And the view, as I say, is now that the Fed is actually going to start dropping interest rates, which is a big change compared to what the market was thinking just 2 weeks ago. So how has that affected the US dollar? Again, a 10-year chart. So the US dollar has been up and down, But certainly this is what we call the dollar index, and it has been strengthening a lot on the back of those 2-year treasury yields increasing. The US dollar strengthened during the same period of time, but has started weakening from October last year. Not as strong as it was. However, in more recent times, in the last 2 weeks, it started weakening a little bit again. And as we see, a weaker dollar generally means a stronger gold price. So this is the gold price, and it spiked up quite a lot, especially since the SVB Bank collapse. It has spiked up. Also, when there's risk aversion, people generally go into gold as well. So let's just see how that's what's been happening on the local stock market in terms of the shares listed on the JSE. I'm just talking about some of the larger companies, the ones that have been hit quite hard over the past week. Richemont finally coming off a bit, down over 21% in the last week, but it's still year to date up 55%. So a dramatic rise this year. MultiChoice down almost 17%, Investec down 13%, Sasol down almost 13%, MTN also down almost 13%. They released results which showed that they're spending an enormous amount of money on mitigating the effects of load shedding, and that's been the theme in South Africa anyway. They've got operations in many different countries, but the South African operations are having to spend a huge amount of money because of load shedding. So that's been a general theme that we've seen from results of companies that have their operations in South Africa. The load shedding really taking its toll on companies' earnings, and let's hope something gets done about it. ABSA taking a knock, Anglo American down more than 10%, Tiger Brands down more than 10%, all in the last week. So it's been quite a tough week or so on the markets. But looking at the other side of the coin, the ones that have done well, as mentioned, the gold companies have on the back of a stronger gold price, weaker dollar, stronger gold price, have risen dramatically. Harmony up over 20%, year to date, almost 14%. So it's been a big turnaround for the gold companies. They have been struggling for a while now. So Goldfields up 17%, Anglo Gold Ashanti up almost 12%. Big moves there. And not too much exciting in terms of upward movements from anything else. Distel up almost 2%, Redefine up 0.27%. So really neither here nor there, with the market overall really under pressure. So that's it for this week. Again, the themes, just to summarize: the SVB Bank collapse. I think the authorities in the States are trying to mitigate and stop there being contagion and that panic spreading to other banks. I think they're doing a good job of that. The market pricing in that they will drop interest rates towards the end of this year. I saw someone saying maybe even 100 basis points, which is a big change from what they were saying a week or two ago. So if they do drop interest rates, or the market expects them to drop interest rates, that should be positive actually for the market. However, there are concerns that we are headed into a recession. So you've got these two opposing forces in the market. So that's it from me this week. Hope you found that useful, and you're welcome to contact me should you wish on warrenes@afrifocus.co.za. That's warrenes@afrifocus.co.za. Enjoy your week.